So let's talk about some cheap stocks. What's going on, team? It's Ricky with TechBit Solutions, and in this video, I'm going to be breaking down two stocks that have just completely tanked. And I'm sure you're pretty familiar with these two stocks. So again, if you guys enjoy this video, please make sure to drop a thumbs up and do not forget to subscribe. One of the things that I do want to share with you is how many of you guys saw that AMC push. AMC hit highs above $44 today alone, and we absolutely killed it within our live trading session. I actually linked the live trading session in the description. So if you want to see me trade AMC and buy the lows, sell the highs, we did a beautiful job locking in profits as it was approaching $44 a share, and we anticipated the pullback that has now experienced, or has now played out the way that we prepared for. And I think that's the beautiful thing about knowing how to trade a stock, because that's exactly what it is, right? It's understanding overbought levels and understanding oversold levels. If you want to continue to choose to hold, then that's on you. But for people like you and I, it is so important to understand when enough is enough and when it's time to lock in those profits. So now it's time to talk about a stock that's actually maybe worth buying, and that is Zillow. So I like to not only talk about a stock on the technical aspect, but I want to talk about the reason why it sold off. One of the first things that I think that you should know is that, well, why is this an attractive stock? Well, Zillow, based off of where it was just a couple days ago from where we're at right now, if Zillow were to recover back to $100, that's a 52% return. Do you get now why we're talking about it? And that's not all-time highs, right? We're talking about 208, so that's over a 200% return if it were to make a full recovery. Now, you can see that Zillow did very well during pandemic conditions. It peaked on February of 2021 and has been selling off ever since. But it's what was said by the CEO, Rich Barton, that I feel, and what was disclosed during this earnings report, that is causing Zillow to sell off. And it's very simple, and I really like the way that he said it. Zillow had a home buying program. If you're in the real estate market or in the real estate game, they were buying everything. I'm sure you've gotten an offer from Zillow if you own a property. It was super difficult for house flippers like myself and my business partner, Nick Palladino, to compete with a monopoly as a Zillow, right? There's Open Door, Redfin, and they were just sending out offers all the time. But Zillow announced that they are putting an end to their home buying program. And the reason why is their competitive edge for Zillow is they weren't in it for the huge margin. They were buying thousands and thousands of properties at a time, and they would make very little margin. But because the markets were so bullish and all they had to focus on was trying to predict 6 months ahead, they were doing so well, right? Think about it. Just think about a couple months ago, right? We had one of the strongest bull runs in real estate market after the pandemic that the housing market has ever seen. And it has shot up so much. Housing prices became so overvalued within such a short period of time that now Zillow, again, think about it, their competitive edge was to try to predict 6 months ahead. It gained so much momentum and became so overbought within such a short period of time, talking about real estate prices, that now they don't know if the housing market has that same momentum. So it makes sense on why they're going to be like, whoa, our edge, our criteria was we were planning 6 months ahead and we wanted to focus on very small margin. Now we experienced such a strong bull run, we're so overbought that we don't know if the market's going to continue to uptrend. So now it makes sense on why they want to pull back. And by closing and putting an end to their home buying program, they are ending or closing that workforce as well, which is made up or makes up 25% of their workforce. You can see why to the normal investor that might be like, oh, I don't know if that's a good thing. But I think the way that the CEO, Rich Barton, put it is it makes perfect sense. If your edge is small margin and to try to plan 6 months ahead, it is very difficult to plan 6 months ahead from now after we just experienced one of the strongest bull runs in real estate history. It's kind of like when a stock pushes up super aggressively within a very short period of time and then expecting it to continue to rally nonstop. Well, no. at one point there's going to be a peak, and it's either going to slow down in which the rate that it grows in, and or it's going to pull back. And I think that is what he's trying to say, is we did great during this bull run in the real estate market, but now it's become so overbought, it's time to prepare and maybe put an end to this program. And that's exactly what they did. So we talked about the technicals, we talked about the fundamentals on what caused it to sell off. It's not that Zillow is the best buy right now. It's just that it experienced negative news. It pulled back a little bit. It's still selling off, but I thought it would be interesting to talk about a stock maybe worth buying when it begins to indicate signs of an uptrend. And it's as simple as adding it to your watch list, setting effective alerts, and following up with it when it makes sense. That's all, right? Let's go ahead and move on over to Chegg. Look at Chegg. Chegg from highs of $62, dropping 50% down to $30 a share. Today it's up nearly 6% on the day, so it's already beginning to indicate signs of a potential support. Look at the MACD, look at the RSI, very oversold. One of the things that you need to know about Chegg is that it was bullish, but for the past couple of months, it has been pulling back. So just a heads up on that. Cheap does not mean that it can't get cheaper. It doesn't mean that you need to blindly buy the dip. Again, have a reason behind everything it is that you do with both your entries and your exits. But I mean, that's really just it. I wanted to talk about two super cheap, oversold stocks. But the one that I was most excited about, I'm sure you can tell, was definitely Zillow. I just love the way that he made it so easy to understand why they're pulling out and putting an end to that home buying program. It 100% makes sense. And although it might be viewed as a negative notion, I think it's for the greater good, especially for their company, right? You can let me know in the comment section if you agree. So again, if you guys want to watch how we absolutely killed it and locked in profits with AMC stock, make sure you click the first link in the description. It's the exclusive live trading session from this morning. You can see my entries, you can see my exits, you can see what it's like to actually know how to trade a stock and not being afraid to lock in profit. So I really do appreciate you guys' time. Don't forget to drop a thumbs up if you feel like we earned it. And of course, consider subscribing. Like always, let's make sure that we end the year on a green note. Take it easy, team.